Welcome back. Now, weak global steel demand and a weak property sector in major iron ore importer China have weighed on iron ore prices during Kumba's first half. Iron ore was included in U.S. President Donald Trump's sweeping tariffs in April and his recent 30% tariff on SA imports, leaving miners such as Kumba caught in the crosshairs. But CEO Mpumi Zikalala says in an environment characterized by global economic uncertainty, Kumba is positioned to continue delivering stakeholder value. She joins us now for more on the performance. Thank you so much for your time, Mpumi. I guess then let's actually start off with the iron ore market as things stand. And quite interesting because we are in an environment where the other commodities are actually starting to make a turn to the upside. Would you say that at this point iron ore is maybe lagging, and just talk to us about what is driving that kind of lag effect on iron ore at this point?
Thank you, Sinati. So the iron ore markets were a little bit softer in the first half of the year, and that's driven by a couple of things. So we've seen a slowdown in the Chinese property market, and even though they have maintained production, we have seen increased levels of exports out of China into other regions. But even with the challenges that we've seen in the markets, we've seen that the floor is still seen to be sitting at around $90 per ton. And more specifically for Kumba, because our specialty is the production of high quality premium iron ore. What was pleasing for us is that we still saw ourselves from an average FOB price sitting at 8% above the benchmark price of $84 per ton. And that's actually credit to the quality of our ore and also our marketing teams who always seek to find the right homes for our production here.
It's quite interesting also that you talk about the increased exports of steel out of China into other regions. And I actually saw in terms of the contribution of China and the other regions, I think China stands at 58% and the other regions stand at 42%. But I think your target for the other regions are 45%. So just talk to me about that kind of still softness in the demand in the other regions outside of China.
So we typically talk about a range and say that we'd like to see our sales, when one looks at our sales to China versus other region, which essentially includes Europe, Japan, and South Korea, we talk about the range of 45 to 55%. So at the 58%, it was slightly above our targeted range. But when we look at it, we always say to ourselves that we need to find the right home for our high quality iron ore. And the biggest thing for us is that the bulk of the customers that we have contracts with value the quality of our iron ore. And they value the fact that we've got a huge proportion of what we call the lump product. And that's actually helpful to them because whenever our customers utilize lump, they are then able to see a 10% reduction in their carbon emissions. So certainly in other areas out of China, that earns us a very good premium. The other thing that people think about is that when they do use lump, they are then able to bypass one of the processes of steel making called sintering. And again, that's why as Kumba, we focus on our product quality. The other thing that we always talk about, Sinati, is the fact that, the markets will always come with their dynamics. Clearly, we play into that by focusing on continuing to optimize the quality aspects of our product. And in line with that, we are investing in our ultra-high dense medium separation technology at Sishen Mine, which is yet an 11.2 billion rand investment that will see us again improving the quality of our iron ore. And the reason why we are doing that is simply because it comes with multitudes of benefits. It will allow us to treat lower grade, we call it C-grade material, and as a result of that, material that would have otherwise gone into the waste stream will move into the production stream. In addition to that, we get to realize better qualities out of that feed, even though it will sit at a lower grade. And in line with that, that technology also allows us to have the optionality to extend the life of Sishen. And we love it because clearly when mining thrives, we see that benefit going back directly to our communities because we are then able to offer what we call shared stakeholder value to our communities. And when we engaged around the results, we spoke about the fact that for this first half of this year, that number was sitting at 25.9 billion rands. And that's money that's either going towards our government in terms of income taxes and royalties, but also money that goes towards our social programs and money that we spend with BEE companies and specifically for us, local host community suppliers. And the last one that I'll mention around this is that it's also money that goes towards our shareholders. And here I specifically look at our empowerment partners who include both our communities through our Sishen Iron Ore Community Development Trust, as well as our employees through Simila. So all in all, if I look at the overall balance, clearly, we want our business to continue being successful because when that happens, then a whole range of our stakeholders get to benefit from that.
Yeah. Mpumi, I mean, I do understand that the macroeconomic is quite volatile and we also have the tariffs, but I mean, just internally, you also highlighted in the results the improved operational performance, but also with that, the stabilized performance at Transnet as well. I mean, with also this investment that you're making into the technology project at Sishen, could there be anything that could incentivize Kumba to significantly increase production in I guess the medium term?
So a couple of things, Nati. So last year, we actually reconfigured our business for a slightly lower production output, and that was linked to the challenges that we were seeing on the logistics front. What's pleasing, however, for the first half of this year was that I've called it more stable production coming out of the logistics space. And people have been talking about the fact that there was an increase or a 3% increase in our sales. Well, that's a direct indication of that stability that we are seeing from a logistics perspective. Clearly, we'd still like to see more coming out of that, simply because you asked me the question, what could incentivize us to increase production beyond our current levels, and we produced 18.2 million tons. From a production perspective, it's certainly our ability to get more production to our customers. I have to, however, give an indication that one of the things that's been pleasing for us is the fact that the results of the partnerships that we have with Transnet, who run the line, the Department of Transport, which has been doing a lot of work, particularly around private sector participation, and also other changes from a policy reform perspective. And then more importantly for us, the other users of the line, and we call ourselves the All Users Forum. Those partnerships have been central to our ability to work together, to get to higher levels of stability and start to see some elements of improvement. And that's something that we are very grateful for.
All right. Well, we do have to end the conversation there, but thank you so much, as always, for your time and for your insights on the numbers that came out of Kumba. I really appreciate your time, Mpumi. That was Mpumi Zikalala, CEO of Kumba Iron Ore.